Let's say you're buying a home either to live in or for investment, or you're looking to buy a commercial property. Both have the same problem, which is financing. Many times it's hard to qualify for a loan for the property we want. So I wanted to share another option, which is actually one of my favorite ways of financing. Today we're diving into seller financing, also known as contract for deed, and why it's an awesome option for both residential and commercial properties. Okay, so first, what is seller financing? In a traditional property purchase, whether it's a house or a commercial property, you get a loan from the bank or a mortgage lender. But with seller financing, the seller is the one that acts as the lender. So instead of going through a bank, you make payments directly to the seller for the property. Whether you're buying a home or a commercial property, you still sign a contract with the seller, agree on a price, interest rate, and payment schedule. And then you make monthly payment until the full amount is paid off. Once that happens, the seller transfers the property title to you. Now let's actually talk about how it works. The seller and buyer will agree on a few key things, which include price. This is the price of the property itself, either residential or commercial space. Next will be the interest rate. Typically, the interest rate might be a little higher than you find with traditional financing, but it can still be better than other options. Another key thing that buyer and seller agree on is the payment schedule. These terms can vary depending on the seller and the buyer. It could be a 5-year term, a 10-year term, a 20-year term, 30-year term, etc. Another big thing is the down payment. Most of the times, the seller is going to require a down payment, but the amount can be negotiable. Another key thing would be the balloon payment. Many contracts will include a balloon payment at the end. This is where you pay off the rest of the balance that you have left at the end of the contract in a lump sum. But overall, I think one of the best benefits of this type of contract is that there's no banks involved. That means fewer requirements, no credit check, and potentially a faster process overall. So why should a buyer consider self-financing anyway? Whether you're buying a home or a commercial property, there's some big advantages. First of all is flexibility. You get to negotiate directly with the seller things like interest rate, payment schedule, and down payment, which can be a lot more flexible and accessible than going through a normal bank. Secondly, there's no banks involved. Forget about all the paperwork, credit score, and waiting forever for approvals. You deal directly with the seller, which can make the process a lot faster. Third, there are faster closings. Since there is no lender involved, you can close on the property a lot faster. From my own experience with clients that I have worked with in the past that I have done contract for deed, including restaurants, houses, we can close in as little as 1 week and a half. And this can be a huge benefit in today's fast-moving market. Whether it's a home or a commercial property, speed matters. Okay, now let's talk about why is this beneficial for the seller. Why would a seller want to offer seller financing for a commercial property or a house? For one, many times they can actually get a higher price for the property since the buyers are willing to pay a little more for the convenience of the contract for deed. Secondly, it can be considered as a steady income. By offering seller financing, the seller is essentially creating a monthly income stream from the buyer. Plus, you get to keep charging interest, which is more money in your pocket at the end of the day. But what if something goes wrong and the buyer misses a payment? The sellers might be able to keep the property and sell it again, depending on the terms of the contract. So there is some built-in security for the sellers as well. Let's say you want to buy a restaurant. Normally, restaurants are one of the hardest business to get finance for. So a contract for deed can be a game changer for restaurant owners. I personally have a few clients who have bought restaurants through contract for deed and they're doing great. To sum it all up, seller financing can be an awesome option for both residential and commercial properties. It's flexible, it's fast, and it's a great alternative compared to traditional financing. Whether you're a first-time home buyer or a commercial investor, it's definitely an option to explore. If you're curious about how to get started, go ahead and reach out. I'll leave my contact information in the description. And I'd love to help you find a deal that works for you, whether it's a home or a commercial space. Don't forget to like, comment, subscribe for more commercial real estate tips. Thank you, and I'll see you in the next video.